out simply because the expectation from the Fed is to raise rates if the economy is still uh, holding strong. So that's the reaction that we are seeing in the markets right now. The market dropped, and I got short. Expectation was for the ES to hit this number, 3881. If this number breached, then very likely it was going to go hit this number. As expected, it came down and testing the 100 moving average on the 1 hour. So, and what the other confirmation that you needed to have was from Apple. Apple needed to come back down, follow its path to the mean, and the mean breach. It is holding the 50 moving average on the hour. So if Apple breaches here, the 50 moving, I'm expecting a bounce right about here. Could be the bounce could last into 134.10, probably 134.30, and probably about 134.50 to 60. But if Apple breaches here below the 100 moving average, then expectation is 133.50, then very likely come back down into 133.15. So this is how it's going to play out. And a better idea is on the 4 hour chart. If it starts to push down 130.80, that could lead to a pretty decent sell off, probably reversing the whole rally from yesterday. Uh, and I think even if it reverses, I would still be trying to look for uh, I'm still not looking for a new lows either for Apple or for the markets. Give me a second. All right, that's the immediate trade. So let's try and understand the bigger picture here. Right. So the immediate trade is very likely a bounce here. If it clears the 100 moving average, expect it to move all the way into 38.82. And the bigger picture here is right about here. So the ES is still expected to hold this push all the way through this 38.90 area. So that's roughly about 30 points. SPX is about 30 points behind the ES by the number. So if the ES is hitting 3870 area, SPX should be testing that 3840 area, 3840, 3845 area. So um, I think if ES starts to hold somewhere about here, right about here, I think the market should stabilize. And if that breaches 3860, as of now, not plotting anything below 3860 for ES. And let's see if it breaches this 3860, then probably we'll look forward for that 3818 number. But for now, this is where I think there's another bounce, 3860 range. Right. So now, to the downside, the if if you're looking at the bigger picture, 3728 and then probably 3660, that's about another 200 points, somewhere about that to the downside. But I doubt if that's going to dump, in the coming week or so. Probably this is a story for next year, Q1 story, depending on how the earnings go and all that. So that's what is happening. And let's go into DXY. So this is the chart that I'm following religiously, DXY chart. The DXY is starting to move up, and DXY has been kept down because of the moves by BOJ. So, and then the Asian currencies are trying to strengthen here. So that's why we see dollar weakening. The direct effect is that the weakening of dollar will have risk assets move to the upside. Uh, but that's the story that's been playing out here. And so far, the trend has been that the dollar index is pinned below its 5 and 8. However, looking at the MACD here and also looking at the weekly chart, I think we are due for a bounce. How far of a bounce? Again, just like yesterday, it could stop right here at the 5. That clears the 8 at about 104.40. That clears about 104.68. And the mean reversion hasn't happened in a while, and the mean keeps dropping here. So I think we need to see a mean reversion for things to come back to normal. Will the mean revert today? Not sure about that. Could this GDP print could be a trigger? Could very well be a trigger for this to move up because the expectation of tightening cycle are, I think that will embolden the Fed to keep raising the rates. So, and if Fed keeps raising the rates, then the dollar index will, of course, strengthen. How far of a strength will it gain? Mean reversion is something that needs to happen. This is just mathematical reality. But when will that happen? I'm not quite sure. If the DXY starts to move to the upside, this is the path it's going to take: 5, 8, inner Bollinger Band, inner lower Bollinger Band, and hitting the mean. I'll be looking for a reject right about here, 104.33, then another reject about 104.42 to 104.50. That clears again the lower inner Bollinger Band, 104.60 to 104.70. That clears, then I'm looking at 104.74. And if DXY takes this path to the upside, obviously the market will push to the downside. Not because of the fundamentals are weak or anything. It's just the technical way that it's going to work out, right? And going forward, the expectations are for the what is this earnings to shrink, contract. So that's going to happen, and that will start to show effect probably sometime starting January. Yeah, I don't know if the Santa rally is going to come in, but yeah, I'm thinking January will be a we'll start to see some push to the downside, of course, depending on how DXY will behave. Right. And let's get into 10-year here. But here, the DXY, this is the weekly chart for DXY. This has been, the RSI has been down here, and then for the right reasons. This is just not happening for, just for the technicals, but for the right reason. There are fundamental reasons that are in play here. Maybe a bounce here, and as looking at the daily chart, the bounce could last very well into 5, then 8, then lower in a Bollinger Band. That clears the mean. So let's see, where is 105 sitting? Right. So this and the downside is still the 50 moving average and the weekly that is still holding the DXY from moving lower. So if it bounces, very likely 105, this 104.50 area that needs to clear. Then if that clears, 105 on the daily mean, and then if that clears, then very likely 105.20, 105.22. If that clears, then we're looking at a push all the way into 105.50. Again, if DXY bounces this way and the velocity of the bounce is pretty decent, I don't know if the velocity of the bounce will be that hard of a bounce. But if it does, then market will of course give up all the gains from yesterday, and then perhaps another one more point, probably about 2% to 2.2% push to the downside. And if you start looking at the market in terms of percentages, it makes a whole lot of sense for you to be in a trade, out of a trade, and how to put on a trade and how to stay in a trade. If you start looking at the market in terms of percentages, and if you start looking at the market in terms of percentages, that will help you move out of this zero DTE business and probably look for something, 2 weeks out, 3 weeks out, something like that. So yeah, okay, that's right. Let's get into the 10-year here. The 10-year right now is bouncing. Obviously, this bounce is coming from. Let's look here. Right. This bounce is obviously coming from the GDP print. GDP print came in better than expected. So the expectation is that the Fed will keep raising rates. And if the Fed keeps raising rates, the dollar will keep strengthening. And if the dollar keeps strengthening, the margins keep shrinking from the for the companies. So that's the whole cycle here. So very likely we'll see. Let's see if it clears right here, the 50 MA. Yesterday it tried to push up but couldn't. The green line here is still pointing to the upside. So we might see again a test of this 3.67 if that clears, all the way push into 3.74 and 3.82 to 3.83. 50 MA on the daily. If it goes up there, and obviously we'll see some weakness in the and if it carries the dollar with it, then we'll see some weakness in the equity markets, or rather risk assets by and large, including crypto. So watch for that. And to the downside, if it starts to come back down, breaches the 3.62, where it is bouncing right now. If it comes down, and this is how we want to see the 10-year behave, not like a meme stock, this way or this way. We don't want to see it behave that way. We want to see it behave within, maybe a few basis points, or maybe less than a few basis points. That's what we want to see a 10-year behave like, right? It's the smart money, or rather the smartest money out there. So we want to see this thing well behaved, not make, any sudden moves. So it doesn't spook traders or investors. We want to see stability come back to this 10-year. This used to be a very boring sort of a chart, but right now this is the exciting chart right here. So we want to see stability come back to this thing. We want to see volatility. There is something called a bond VIX. If anybody interested in that, go look for that, and you can actually make trades based off of that bond VIX. Right. So coming back to VIX, sorry, coming back to the 10-year, we want to see it stay below here, probably come back down to test the 5 again, breach the 5, test the 8 at about the 3.6, and hold somewhere about here, 3.57. So let's say if it starts to hold somewhere about here within this range, then I think the markets will remain range bound. But if not, if the VIX, if the US 10 starts to push to the upside, then very likely, push to the upside all the way here into 3.82 or something like that, then very likely we'll see the market, the risk assets weaker. Right here, it's bouncing off of good levels. That is very good. So that's just how the healthy bounces look like. If it bounces, very likely it's going to push into about 2.66. Then that clears, then very likely into the upper inner Bollinger Band, 3.73. Hopefully it stays there. Hopefully it stays tamed. Hopefully this is an ephemeral bounce, and it doesn't cross this 3.76 to 3.77. And hopefully, if it starts to come back down, that would be nice for the equity markets. I'm still hoping for it to be ephemeral bounce 3.77 and start to come back down, because we don't have an FOMC till February. Hopefully this GDP print is considered as a positive for the economy going forward. The recession fears that we are, that the market is witnessing, maybe that kind of alleviates a little bit, and then the market starts to calm down. Looking at the MACD and other indicators here, it still looks like whatever this is happening here, this is probably temporary or ephemeral. How far of a bounce, I still don't know, but until this thing starts to curl back up again here, maybe there's a chance that it'll start to come back down, right? So, but if it curls to the upside, then again we'll see 10-year push to the upside. That means market very likely push to the downside. Right. Okay. Let's get into VIX a little bit here, but keep in check this chart. This chart is still suggesting a downside. MACD hasn't crossed to the downside on the month, but we are seeing these pale green bars come up on the monthly side of things. So yeah, maybe there's a good bit of chance probably this will start to curl back to the downside. And once the monthly starts to curl to the downside, then we'll very likely see this thing come back down. And similar thing going on with the DXY chart. We still have to see this thing curl to the downside. Very likely it'll start to push to the downside. If it does, then very likely we're going to see 102.30, probably 101. So this is going to be a bigger trade. And if you see DXY calming down, the first thing that you want to do is jump on precious metals, gold, silver, whatever that is. That will push. That will pop. The first thing that'll happen is the precious metal trade will come into picture. All right, let's get into Apple. How much time? 15 minutes. All right. Let's get into Apple Weekly. Apple Weekly. Alexa, backlight off. Right. So Apple still looks like if it bounces 138 to 140, 50 is still the target to the upside on the weekly. But if it starts to push to the downside, then we still have 128, 128.50 to deal with. That's a bigger picture, and let's get on with the daily chart. The daily chart. Yesterday we were looking for a push all the way into 135.50. If that clears, then the eight on the daily, and we got both the targets. Now again, the same scenario. If the same scenario plays out, we are looking for a bounce. Right now, we are getting that bounce around 134, and if that clears, then again a test of the five. Here, I'll be looking for another breather about 135, 135.50. Probably that would be a critical point in the market, and if that clears the upside, then very likely it's going to push into the eight again. And these lines are dynamic, and as the data gets populated, these lines will start to change. So wherever these lines are at the given moment in during the trading day, we'll we'll adjust our trades based on the lines. Right. And then the MACD, if the SMI has crossed, the MACD hasn't crossed, but the histogram here is showing us at least one pale red bar, and a smaller red bar here. So that means the selling is looking like it's subsiding. And this doji yesterday on the Heikanashi side of things, this was not a complete inside day, but still a doji, and hopefully we get some sort of follow through to the upside, probably again 137, 137.50. And if anything beyond this 137, 137.50, probably if the mean reversion happens around 142, 143, that would be a Santa rally. Right now, not plotting anything above the 8 on the daily, about 137, 137.50. Not really plotting anything above that as of now. Yeah, and that's how Apple is going to play out. And here is the reason I was looking for a bounce on Apple. The 50 MA, it is bouncing, and the bounce very well lasted. We just talked about it when we started the charting. uh, to the mean. If the mean clears all the way, push all the way into 134.30, 134.50 range, that clears the 5 on the R is sitting at about 134.50. And the 8 is at about 134.67. And this line right here, this is the baseline, a very likely 135 baseline, unless this changes. 135 baseline is still intact. So to the downside, right here, if the 50 breaks to the downside, 50 breaches, then very likely we're going to push all the way down here into 133.50. That breaches 133, 133.12. Um, right about here. I think 132.70 is not out of the question. We still have SMI cross to the downside. We still have this green line cross to the downside. Right now, it is bouncing off of a good level here. The RSI getting oversold, hitting a major moving average. That's a bounce. That's just textbook. But if it breaches below there, then we'll look forward for further downside. Very likely 133.50. That breaches 133.17. That breaches about 132.70. That breaches, then probably very 130, 120. As of now, I think 132.70 is what we want to where we want to stop uh, the push to the downside. Ideally, I think it should stop somewhere about here, 133.17 area. But if that breaches, very likely we want to see a bounce around 132.70. If that breaches, then there is more pain. If you're long, there's more pain on the way. Uh, but if you're short below this, then yeah, it will work out for you. Let's get into yesterday. We did not get into Tesla. Let's get into Tesla. Looks like Tesla. Let's go right here with Tesla monthly chart. Very likely Tesla will test this number right about here, 130, 131 to 134 range. So I think we want to look for, at least I want to be looking for another bounce area here. That breaches very likely is going to push all the way down into 100. Probably this story is for the next quarter. This $100 100 print on Tesla is probably next quarter, not this quarter. Probably we get a bounce around here, but who knows? Tomorrow being Friday, long weekend coming up, and I don't know if anybody wants to hold anything long into the weekend. very likely we're going to see this thing pushed down tomorrow if the selling comes into picture. And another thing that is developing in the Asian markets is Shanghai, or rather China COVID situation. Government lockdowns, they said it was bad. Now government has lifted those lockdowns, and it's terrible. And then the death toll seems to be rising, and then it's not being reported on the government in the government numbers, simply because the COVID the definition of that death, a COVID death, now has been changed. So that's the reason that's those deaths are not being reflected. But seems like it's the number is anywhere close to 5,000 as of now. So watch that. If Shanghai, if something, if a big city like Shanghai goes into lockdown and goes into some sort of a panic mode, that will definitely affect the supply chain, and the world is not ready for another supply shock. Let me repeat that. The world is not ready for another supply shock. If another supply shock comes in, then inflation will go through the roof. And Fed, I don't know, what the Fed is going to do to fight that kind of inflation. Are they going to raise the rates more? If they're going to raise the rates more, then we'll have total panic. Inflation will go through the roof, obviously, and rates will kill the growth. So where are you going to hide? Yeah, that's another question. That's a very good question, and I don't know how we're going to deal with that. But as of now, that situation is developing, and very likely, I think Japan sees that and trying to front run that situation by tweaking their monetary policy. I think that's what Japan is trying to do there. So watch for that. Japan's one interesting one interesting development is that Japan's real rates were negative. Now it has come back. That at least their 2 year is now come back up above zero. Uh, so that's a very interesting development that is happening in Japan. Japanese monetary situation. So follow that. Right. And let's get into Tesla. So yeah, we are looking at a bounce for Tesla around 130, 134 within this range, wherever that range falls into. Uh, as of now, not really plotting anything below 130, but if push comes to shove, Tesla will still push lower, perhaps into 109, somewhere about there. And perhaps another bounce for Tesla. We're looking at 86 to 88 area, the 100 moving average. Yeah, the 100 moving average on the month. That's a pretty steep push to the downside, and there is a bright chance of that happening. Why? Because the monthly 8 below 21 has happened here. It is done. So very likely there'll be a continued push down. But looking at the weekly, there could be an at least an ephemeral bounce, some sort of an ephemeral bounce. Will put Tesla again around, I don't know. And this is not a story for today or tomorrow. If the Tesla bounce comes in based on what is happening here, and this is technicals, but right now the selling is relentless, irrespective of the technicals. But if the technical plays out, the selling subsides, then very likely the bots, the people, whoever are in the market participants, whoever are interested, will pick up Tesla. Let's get into Tesla here on the day. So looks like it is getting oversold again. The MFI is pulled down all the way here, and MACD is all the way down here. If it starts to curl to the upside, I'm watching SMI here. I'm watching SMI, and anytime SMI is it's down really bad right now. It's I think it's one of the worst pull down in the SMIs in Tesla's history. Right? Look at all these pullbacks. The current one is the lowest in terms of SMI for Tesla. So I think if the SMI starts to curl up, we can see a technical bounce and probably some sort of short covering come into picture. And the 5 for Tesla is sitting at now about 145.66. So yeah, if Tesla takes this path to the upside and technical buying comes in 145 to 145.50, that clears, very likely push into 151, 151.50. Very like not really plotting anything for Tesla above 154 as of now. But if that clears, then we'll reassess the situation and plot something above 154. That's a steep, push to the upside. I don't believe that's going to come today or even tomorrow. But Tesla being Tesla, it could do it. But for that to happen, it needs to clear the five on the daily, about 146. So that's a still decent bounce, 10 points to the upside. Again, these lines are dynamic. If Tesla pushes down into 131, this line will adjust to the downside and perhaps will come back down into 142. Right. And let's get into Tesla on the 1 hour. Yeah, this was the move right now. This still is pointing down. But if the broader market moves to the upside, then very likely we'll see this again push to the upside. But I think the larger move is still pointing to the downside, probably into that 134 to 131 area. All right. All right. Let's get into SPX a little bit more because that will stick with us. Again, to the downside, this is a bigger picture, 37.15, 36.70. To the upside, about right here, 39.08 to 39.26 for SPX. That's a bigger picture, and let's get into the lower time frames. Tradable, yesterday, this was very clear push to the upside, and 38.88 was a pretty decent size resistance. And let's get to where is SPX? Right here. So right about 38.40, I think SPX is right about here right now. The mean on the right now, the mean on the hourly is getting tested. SPX will open somewhere between this range, uh, these two lines. So if the mean breaches, obviously we're gonna go test this number right here, 38.30. Then we'll look for another bounce about 38.25, 38.20 area. That breaches very likely push it to 37.88. Uh, this is not the base scenario for it to get into 37.88. Very likely, we're going to see another bounce here. But if that breaches, then this number should come into play again, about 37.96 to 37.90. So that's the path to the downside, and the path to the upside. If it starts to bounce from the mean, again come back here at 21.38.58. The same thing we experienced yesterday, 38.50, 38.58, then push into 38.60 area. Yesterday it was here. Now it's a little bit up, 38.67 area. But and if again 38.88, yesterday this line was acting as pretty decent resistance. And for me to plot any further upside on SPX, it needs to clear about this 38.88. And if that clears, then probably 38.99 to 39.07. Yesterday, this is the reason I was looking at 39.07. Obviously, did not materialize. Today, we are looking at an open somewhere about here, 38.39. Sorry, 38.40, somewhere between 38.30 to 38.40, somewhere about this range. Uh, 2 minutes to open. Let's get into live trading.